So, how did the market go from wiping $900 billion from US stocks to closing strongly in the green? We also saw US crude oil futures going from $120 per barrel all the way down to just over $80 per barrel in the span of 24 hours. So, we saw ships beginning to cross the Strait of Hormuz again. Reports were stating that they were turning off their transponders, going through the Strait of Hormuz, and then turning them back on after they crossed. Now, this led JP Morgan Chase to report that a war with Iran could lead to a 10% stock market correction, which is pretty significant and honestly would be a pretty good buying opportunity for retail traders. But the question is, how bad is this going to get, right? So today, as I mentioned, we saw a massive crash in oil prices. Oil prices crashed from 32% in the last 19 hours, from a high of $119 per barrel down to $82 per barrel. And there's two main reasons for this. Number one, the G7 announced the release of 300 to 400 million barrels from the reserves. And number two, Trump signaled an end of the war soon and emergency options to lower oil prices. So, as I mentioned, G7 energy ministers are going to meet Tuesday morning tomorrow to discuss the release of oil reserves. Just want to remind you guys the G7 members are Canada, France, Germany, Italy, Japan, the United Kingdom, and the United States. And 300 to 400 million barrels is actually a really, really significant amount. That represents about 25 to 30% of the 1.2 billion barrels in the reserve. So a decision like this, isn't taken lightly. That is a lot of oil to release, but it will help bring down oil prices. And I just want to remind you guys that this Wednesday we have the CPI data report at 8:30 in the morning Eastern time on Wednesday. And this is going to be extremely significant. And this is going to tell the Federal Reserve a lot about what they have to do in regards to interest rates. Because right now we have a projection of about 2.4%. If it comes in any hotter than that, it's likely going to be bad news for the market. And I want to remind you guys that on Friday, we saw the report of unemployment, and that came in hotter than expected. So, rates of unemployment right now are way higher than expected. And this can get really bad when you mix it in with high inflation. If the CPI data report comes in hotter than expected, that can kind of lead to stagflation, in which there's stagnant economic growth, there's high unemployment rates, there's high inflation rates, and this really becomes a problem for the Federal Reserve because they don't know if they should increase inflation rate or increase interest rates, which can lead to higher unemployment. It just kind of becomes a balance. And what did they do? That's what they're going to be asking themselves on Wednesday if CPI comes in harder than expected. And as for stocks this week, I'm going to be watching Kohl's earnings before open on Tuesday. I'm going to be watching Oracle earnings after close on Tuesday. And I'm also going to be watching Adobe after close on Thursday. And I'll show you guys why I'm going to be watching those. So the reason I'm going to be watching Kohl's on earnings is because if you guys remember in November, it had a super strong move with a lot of momentum. It went all the way from about $14 per share all the way up to $25 per share in a span of just a few days. So that was about a 60% move. And that was due to, I believe they increased full year guidance. They had strong third quarter earnings, and they also established a new CEO. So I'm going to be looking at Kohl's not necessarily for a long term, just as a short term play, just to see if it gains momentum like it did last time. It made a 60% move last time. I'm not sure if it's going to make the same move this time, but I'm going to be watching it for some type of move. Like I said, it it gained momentum right around this $15 mark. Right now we're trading at about 14.50, but it's really close to that same $15 mark where it started ripping. So that's why I'm going to be watching it at this level, 14.50 to $15 off earnings, to see if it gains some momentum to the upside. As I mentioned, it's not necessarily, in my opinion, it's not necessarily the best hold long term, just because you can see it's been getting rejected constantly by this 30-day EMA, and it's not proving to have a ton of growth right now. You can see even from 2018, we were trading at $55 per share, and it's been making lower highs, lower lows ever since. So that's why I'm just going to be watching it for this earnings, just to see if it gains some momentum. I'm also going to be watching Oracle. So Oracle is down pretty significantly this year. It's down from highs of 344 all the way down to about 150. So that's about 55 to 60% on Oracle. And you can see it has this weekly trend line that I drew out here, and it's been kind of consolidating right at this trend line. It's not seeming to want to break below. We also have the 200 weekly moving average here that's also seeming to find support at. So that's why I'm going to be watching Oracle. Being down so much, 60%, honestly, any good news could kind of make it rebound a little bit. So that's what I'm going to be watching for here. I do like their business. They do have um, about 40% guidance growth in their cloud business. Um, but the problem and the reason it's so down is because they're investing a ton of money. I believe $50 billion in AI, which hasn't really proven any returns yet, right? And they also have really high concentration in their customers. So I believe they have really huge deals with OpenAI, and there's just a lot of uncertainty about their business, right? Like it could pay off. It could absolutely 100% pay off in the future, but it could also go pretty badly if, AI doesn't help them out as much as they're expecting. So that's why I'm just looking at Oracle for a short-term hold just to see if it kind of catches some momentum off this weekly trend line or off the 200 weekly moving average. And like I said, being down 60%, it's not in a terrible spot to look for, starting to build a position around here and see if we can get a bounce back at least to maybe the 30 weekly EMA. Um, and like I said, I'm also going to be watching Adobe. So Adobe, similarly to Oracle, is down a huge amount. It's down from highs of 699 all the way down to 282. So that's about another 60%. So that's why I'm going to be watching Adobe. Adobe has actually been pretty strong lately. I believe it has about 10% revenue growth, and the guidance isn't looking too bad either. So that's why, I don't mind putting some money maybe into Adobe at these levels. Like I said, it's also approaching the 200 weekly moving average. So it's been very bullish in the past. It's not kind of like when you compare it to Kohl's, you can see Kohl's has been consolidating and just trading sideways basically since its IPO, since 2000. 2000 it was trading at $36 per share, and it's really not broken past that up until 2018, and that just fell right back down below. But when you look at Adobe, it's been having really strong growth. Um, but there's been disruptions due to AI, uncertainty in its creative business because AI could provide faster solutions, um, cheaper solutions. So that's why there's a certain uncertainty around Adobe. But I am interested in seeing what it reports in its earnings if it continues to grow. And yeah, we'll see if it bounces. I'm not looking, like I said, for necessarily a long-term hold at these levels, but it could catch some momentum off earnings. But yeah, let me know what stocks you guys are watching. Let me know if you guys have any ticker symbols that you're going to be looking at this week. I'm interested to hear what you guys have to say. Drop it in the comments. Drop a like if you like the video, if you learned anything new, and subscribe if you like the content. I appreciate you guys. I'll see you guys next time.